breakdown. I'm back with another valuable video today. Now, if you've been struggling to find consistency and profitability in the Forex market, you found the right channel. And in today's video, I will reveal to you the big bank's secret in how they engineer liquidity to essentially force you in on the losing side of the table while they collect profits. Now, by the end of the video, I hope that you'll be able to see the footprints that they leave behind and how they engineer this liquidity so you can be on the profitable side, okay? So let's just jump straight into it. So in order to trade like the big banks, you have to think like the big banks, all right? And what I mean by that is when the institutions are fulfilling orders or whatnot and they're repricing price either to the downside or to the upside. And when I think of that, I usually think of we're priced at a discount or we're priced at a premium, right? And so when they're repricing, right, they have to engineer liquidity in the market, all right? And so the way they do that is they know retail logic is to typically enter into the market when it's far too late, right? There's been times I'm sure that you have entered a short or entered a long and you may have gotten a little profit. Maybe you get 5-10 pips and then boom, you get stopped out and you lose your shit, right? And so the reason why is because you've been, taught for a long time to trade, trade the breakout and retest. And there's many, there's a plethora of other retail strategies that we can go through. But the idea here, when we're looking at these charts, we're trying to come with the same point of view or perspective that a large institution would have when they are entering their orders into the market. All right. And so when you can think like them, you can trade like them, right? Not necessarily beat the market maker, but you want to just ride their coattails and follow along because they will show their footprints. It's just up to you to grab that flashlight and continue to move through. So now when at this chart, right? So when we're looking for, liquidity, we're looking at areas or key levels where there can be resting pending orders, aka buy stops and sell stops, okay? And what we can look for is when we're on a chart, right? It doesn't matter if it's the daily, weekly, monthly, or 15-minute or 5-minute. Price is fractal. In this instance, we're just using a daily chart to illustrate. But what we can see here, right, as we can see order flow going bullish, right? We see order flow going bullish. And then we see a swing high form and we start to see a reversal, right? And we start to go to the downside. We consolidate, come back up, go down, right? So we can see that price here, this swing high point, is a very pivotal point in this market right here because you now have a drastic turn to the downside, right? And so this key level here is a swing high that you want to pay attention to. You want to pay attention to this area, okay? And then we go down and then we create these, equal lows. We create these equal lows here, right? And what happens? Price comes down, price goes up, price comes back down, goes up. So classic, what you've been taught, this would be like support, right? This would be considered a support line. So classic support, you're buying at support. And the reason why I draw out these two levels here, this range here, this swing high, to these equal lows or a swing low point where we reverse and go back up, is that when we're looking at this, what I'm thinking of, and when I'm trying to put myself in the shoes of a big institution or a hedge fund, right? You have to think, where are the resting orders, right? And when we make the swing high, you have to know that people who are seeing this move go long from retail logic, they want to continue to get in on the buy streak. So what do they have here? They have resting pending orders because they think if we get above here, if we can break this high, we should continue on the upside, right? So you have resting pending orders here. So you have buy stops. And so you will put pending buy stops here, okay? And then, so because we were thinking we get above, we're going to go long, right? Below here, you would have sell stops, right? You have sell stops here. So we know if we break this, we're going to go short, all right? Now, knowing this, right, I am me potentially, how do I put myself in position to not be with the retail, not with the herd, the retail crowd, but I want to be on the side of the big banks. I know that how they will want to enter the market. As you're going in short, they're thinking of going long and repricing higher, right? It's basic economics. You know, it's supply and demand. You know, we buy low, we sell high. It's basic business, right? And so these are things that you know, when I first started my journey, I didn't realize, you know, why so many retail traders didn't understand this basic principle. Okay. And so when you see this, right, I'm thinking when I'm seeing this down move or when these institutions are repricing lower, they're repricing from a higher point, from a premium. So they're essentially, you know, buying in at a, you know, getting in at a discount, right? And then their profit making is when they are on this side of the curve, right? They are essentially supplying the market, and then they're going to distribute and take their profits on this side of the curve, okay? And so as they're doing that, as they're just washing their hands back and forth, what happens is you get a sweep above these pending buy stops. So people who get activated, right? If you're looking here, right? People got their pending buy stops activated. So that's engineered liquidity right here, right? So you're in the market, then boom, what happens? They immediately stop you out and they take the market where they want to take it, right? Because as price is moving up, you got to think, you know, you're thinking, man, as long as we continue to, you know, break the previous highs, I'm going to get in. But the price reverses, okay? And then on this end of the spectrum, you got everyone, the pending sell stops, people who are like, you know, licking their chops, thinking, oh man, we're going short. We break these equal lows, we're off to the races, right? So what happens? They break these equal lows, they activate those pending sell stops, right? And so you got to think, you're excited in the market as a retail trader. Oh man, I'm in. I made the right decision. And what happened? They purge that liquidity, right? They purge it here. They activate you, and then they take you out. They take you out. Now you're in drawdown. You're stopped out. What have you? Now they are going to go back up. They're going to reprice back up to a premium to eventually, essentially, you know, take their profits as well. So when I'm looking at this, right, or when you're looking at this, you're looking at this in a sense of, I am not looking to go short. I'm looking for, you know, the opportunity. When I'm seeing this sell side of the curve, right, I am licking my chops for the opportunity to reprice higher, because I'm thinking of this in the same, just as if you're running a business, right? If you're running any type of business, if let's just say you sell, notebooks, what have you, right? You sell school supplies or office supplies. If you sell office supplies, right, you're going to go to your distributor or your manufacturer, and you're going to want to buy at a wholesale price at a discount, correct? Right? You're going to want to buy at a discount. If you want to be a profitable business, you're going to go into your manufacturer and you're going to order whatever the minimum order quantity might be. Let's just call it 100 units. You're going to want to buy 100 units at, let's say, $2, or let's just call it $1, right? $1 per unit. So you want to spend $100 to sell at a premium price to collect profit, right? You want to, like, if we're just talking normal business. If you are selling office supplies or school supplies or whatever, you're going to want to buy from your distributor or your manufacturer at a discount, at a wholesale price. So you're going to go buy from them for $1 per unit. You're going to spend $100, and then you're going to go to the market, to your customer base, to your store or whatever, what storefront, e-commerce store, whatever your storefront is, right? You're going to go sell to your customers at $2 per unit, right? Because you want to double your money. You want to double your investment. And you're going to sell to your market, to your customer base for $2 per unit to ultimately, make $200. So you collect, $100 in profit, right? It's simple economics, right? That's exactly how you want to think when you come to the charts. And I don't know, it's such a simple idea that I feel like a lot of people overcomplicate when they come to the charts for some reason. And so when you just have that basic understanding of how business works, you're going to approach these charts and you're going to see the liquidity in the market from a premium to a discount perspective a lot easier, okay? And so when we come to these charts again, like I said, we're looking for potentially most likely where retail logic is. And this is where the retail logic comes in hand, because you know that this will be considered resistance. This will be considered support, correct? So, retail logic, if it breaks support, you got the breakout artists, you got the guys that's just going to buy on the breakout, and then you're going to have the guys that's going to break out. You got to see the confirmation. You want to see the retest. You want to see support turn into resistance to go short. And you got these orders being activated in droves, right? There's a reason why they say, 90 to 90, whatever, 98% or 97% of retail traders lose money is because they are getting in on the wrong side of the market. Now, don't get me wrong. There are a lot of profitable retail traders that practice great risk to reward ratios and great risk management. So it's not a shot at retail logic or retail traders, because there are a lot of great retail traders out here. But for the majority, they are on the losing side because they don't have those other things like great risk management, great discipline, and things like that can tie in to know when to get in and know when to get out. But whether you're brand new, a novice, or you're advanced, I think this method of understanding where the next draw to liquidity can happen, you have a firmer idea, right? And so what we see here is that sell stops got activated, right? Pending orders got activated. Everybody's in short, right? They're fucking excited. They're like, man, we're about to make a shit ton of money. And what does the market do? they flip the market and go to the other side, right? And so this is a daily chart. If we bust this down to a, per day like situation, right? If I'm seeing all of this liquidity, let me delete this orange box, it's distracting. So when we're looking at this, right, and we're seeing, and we're just assuming that we know the bias and the order flow from the higher time frame and everything. As you can see, as this liquidity is purged, right, I'm looking at an area to enter the market as price has purged that previous, those equal lows. Once it does that, I am waiting for a potential setup, right, to go long. I am still waiting patient. I'm not just jumping in going long, but as you can see, once we get all of that sell side liquidity and I'm like anticipating us to go long, I am looking for the next draw on liquidity as a day trader. Okay, so on these lower time frames, I'm coming in and my eyes immediately goes to these previous highs. Okay, I'm going to these previous daily highs because I'm thinking, okay, if we've already purged and they've generated liquidity, and we know that based off of our analysis and fundamentals and everything else, my eyes go to this Tuesday's high, right? And I am waiting for my opportunity for us to go draw on this buy side liquidity. So now we are just attacking pretty much every previous day's high from there. So after all of the sell side liquidity gets grabbed, the buy side liquidity is next. Okay. And I have an even better example of this on. Okay. And these are trades that actually was taken in real time on the live stream. So if you haven't caught the live stream, definitely check us out every day, Monday through Friday. But same thing I was showing you. As I saw sell side liquidity being purged, okay, I waited for the perfect opportunity in the market. So this time and price theory has to align itself. And that's a different topic of discussion. But once I saw that the liquidity had been purged from the daily time frame, I can knowing that we're anticipating a weaker dollar. In conjunction with that, I know my foreign currency will want to reprice higher as the dollar gets weaker. So my eyes goes to that previous daily high as a day trader. I see a setup on on the 5-minute chart, and I go long, and we capture that liquidity. Okay, so as you can see, the logic is here. I am buying as I am getting into the market. I'm looking to get into the market at its lowest point, right? I'm looking to get in at the lowest point, not as price is pricing higher, because as price is going higher, the odds that the probabilities get lower, right? In this instance, price kept going because it was, it had a lot more liquidity to grab. But if we're just looking at it from this day's perspective, I'm looking at this previous daily's high to get taken out first. All right. And so when you're looking at it, when you're thinking about liquidity and how these institutions engineer liquidity, you're just looking for where retail logic will have resting buy stops and resting sell stops. You know that you are, 10 times ahead of pretty much a lot of the retailers or retail traders in the marketplace. And so start to recognize that. Look for where the pending buy stops. Just use simple logic. Don't try to overcomplicate it. And I think a lot of people try to overcomplicate it using big, fancy words and all that. It's not that complicated. Just think of it in terms of where resting buy stops can be, where resting sell stops can be. Look at it from a higher time frame, narrow it down to these lower time frames, okay? And really start to just understand. Like when you're seeing price, I guess being sold off, or you're seeing a repricing to the downside, right? Think of it, okay, where's my opportunity to go long, right? I don't want to get in as price is, unless like you want to get in on a short when price is at its highest point, not as price is breaking structure, going lower and lower, which I mean you can if you're a scalper, I guess. But if you want to capture massive moves and ride along with the big banks, because this huge pump up on pound US dollar is not retail traders. This is definitely big institutions, because only big institutions can move the market in this magnitude at this velocity and volume. Okay, so you want to get in and get in right, or like, and ride their coattails. That's it. So find out where the sell side liquidity is. Find out where the buy side liquidity is. Find out what is the next logical area for it to draw to based off of liquidity already that has been purged. Okay, and so hopefully this all made sense. If it did, great. Comment below, let me know your thoughts, feelings, concerns, questions. Drop them in the comment section. If this was a little confusing for you, also let me know that as well. Maybe I can clarify it even a little bit better. My idea here behind this video was keep it as simple and put it in layman terms, and not try to confuse you, because I feel like there's a lot of confusion out here when it comes to these smart money concepts and liquidity and things of that nature. Just think of it in those terms first, baby steps, and then as time goes on, I will get a little bit more advanced in the teachings here on YouTube specifically, and dive in a little bit deeper on on these type of concepts. So for the most part, make sure you guys comment, like, subscribe, check out these next couple videos that I got for you guys. Order block theory, everything like that, anything that you can imagine on smart money concepts. So hopefully you guys stay profitable, get consistent, tap in with me on the live streams. We'll talk soon.